For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started.
Good day, traders. Stacey Burke from Stacey Burke Trading. We have a CPI week Wednesday, and today we're having a mindset reset technical video. We're going to be talking about specifically trading setups that rinse and repeat, where we have an edge in the market, and working on the headspace and mindset of sitting on your hands in between. The purpose of that is to be targeting setups where you have a 90-10 edge that show up frequently and repeat on any instrument so that I can continually grow my trading business. I'm not trying to trade every day on 50-50 conditions, which are really 30-10. Same setups over and over again, not taking trades. Trading the same setups over and over again. The purpose of focusing on rinse and repeat setups is that we have a well-defined trading setup, which is crucial for consistent profitability and risk management. The purpose of having specific rinse and repeat setups is that you will be focused on the days and the setups where it's easy to make money on. If we go down to our playbook setups, we have the basic model, which was our first green day, page 64 in the playbook, first red day, page 58 in the playbook, 3 days of breakout traders in the markets, page 51 in the playbook. Now, in the last few videos, we've gone over the higher time frame templates. Also, the 3-day setups, 3-session setups that culminate 3-day templates. We've talked about the ACB masterclass and having a simple basket of instruments that you can hunt the setups on, as opposed to trying to trade your favorite instrument every day, even on days when you have zero edge in the markets. A basic, simple basket, a couple of indexes. If you're trading the Europe-London window, have the DAX, have the FTSE. Metals, gold, silver, just for simple 2 high volatility, high probability metal instruments that offer great trade setup opportunities. Then we have our energies, West Texas, spot crude, natural gas. I look for specific setups on those 2 markets. And of course, our major pairs, the yen, if you're trading the Asian session, the yen and the yen cross pairs. If you're trading London and Europe, of course, obviously the euro cross pairs and the pound cross pairs can offer best trade candidates. We're going to look at an example from each of Asia, London, and New York today. And then understanding your signal days, first red day, first green day. We've gone over that in the last few videos specifically, and they're in the course, mastering the higher time frame. Inside days, very important signal day, 3 days of breakout traders in the markets, and markets that close in breakout. Setup. So signal, setup, and execution. That's as simple as it can get when you have your setup that you're hunting. 2 types of setups, trend trades or reversal trades. And there are only 2 types of templates when those setups present. Pump and dump and dump and pump, 3-session setups. And then execution of that trade setup. Entry, stop loss, and take profits. There's only 2 things that traders can control in any trade setup situation: how much you will lose and how much you can profit on a winning trade setup. There is nothing else. There is nothing else a trader can do. The only variable the trader can control is how much they'll lose, how much they'll gain, and then also not engaging in any self-sabotaging, impulsive, irrational, emotional, degenerative gambling type of behavior. First, understanding what exactly a trading setup is. It's a well-defined, systematic approach that traders can use to make informed decisions involving specific rules and criteria, regardless of the session that they are trading, regardless of the instrument that they're trading, having a specific rinse and repeat setup. Now, it's essential because this offers the trader a blueprint or a set of conditions that the trader, number one, can use to identify potential trade opportunities. Again, coming back to signal. What signal alerts you to an instrument potentially setting up for a best trade candidate or an ACB opportunity in the session that you're trading? Let's go back and look at this again. Signal day, first red day, first green day, inside day. We talked about following the higher time frame thesis through with markets. We're going to look at an example of a first green day trade today. We'll look at a follow through example, and we'll also look at markets that have closed in breakout. Now we have CPI Wednesday, day 2, Tuesday day 2 typically expands the range. Now we'll review this again. Front side, Monday day 1 is the opening range. I want to clarify something. So each day, if you have an opportunity or a setup that you're hunting, they're specific to the days of the week and whether or not the instruments themselves set up in the session that you're trading to offer you that trade setup opportunity. We're not counting pushes, not measuring gaps. We're not looking for sweeps or hunts or premiums or discounts or soups or anything else. They're specific templates that rinse and repeat. That's on the front side. Wednesday is the midpoint range of the week, and it resets heading into the back side of the week. Now, Wednesday this week is CPI. There are typically 3 very high impact news releases: non-farm payrolls, CPI, and the 2-part FOMC release. Then heading into the backside of the week, Wednesday resets to day 1. Tuesday is day 2 on the backside, and we can often see range reversal opportunities. And then Friday, of course, is the closing range of the week. The markets only do 3 things. They break out, they pull back, they continue to trend. They will break out, fail, and reverse. So we have our trend trade setups, we have our reversal trade setups, and we have markets that will trade sideways in a trading range, which can also offer us 90-10 best trade candidates, maybe for one session or one day opportunities, hold till close. And I'll repeat this, all setups come from the higher time frames, meaning the daily charts. Now, we've gone over this in previous videos regarding the higher time frames and the specific setups, but if this is the dump and pump template that I am hunting and I have a specific criteria that brings an instrument up on my watch list for the New York session or the Asian session, this is the dump and pump template. And if I'm hunting the shorting opportunity, the pump, coil, and dump template. Now, here's the thing. I'm going to encourage traders as a piece of their homework to actually draw out the setup that they're hunting. My friend Steven, I talk about it all the time. If I ask Steven to send me his setup, he can send it to me probably within 5 minutes of emailing him if he's available. And he can send me at least a dozen different examples on different instruments of the exact same setup that he's looking for each day. And then, of course, the larger time frame template that can set up for the larger monkey hammer type of opportunity. So your first piece of homework today is actually to be able to draw out the setup that you're hunting and understand the variables and mechanisms that set that trade up, the signal, how it should behave into your timing window, how you're going to place your entry, your stop loss, and where you're going to take profits, whether you're going in the short direction or the long direction. If you can't do that, that potentially gives an indication that you're still going to the market to take trades. Now, these are trade setups where I virtually have a 90-10 edge in the market, not trying to catch a move or grab the high or get in and get out and get lucky. Now, we have a CPI week, and we have markets that are potentially going to be nail and bail conditions until we're on the backside of the week. Now, gold comes up on our list as one of the instruments because it closed in breakout on Monday, day 1, the opening range of a week. If we go back to our higher time frame, we can see a larger range-bound market, a market that's in a trading range. So we get to the end of February, we had our first red day, locking in the high of the month, trading down into the closing range of the month, locking in a first green day as March begins. And since then, we have traded sideways. And traders who may be caught buying high, getting stopped out or losing money or averaging into losers or engaging in impulsive, irrational, emotional behavior, and traders that are selling down low potentially may be getting caught. We bring this instrument up on our watch list, whether you're trading Asia, London, or New York. So understand that the instrument shows up on your watch list regardless of the session that you're trading. And then how does price behave into the timing window? So gold's closed in breakout down low, and we're on Monday, day one, the opening range. Day two typically expands the range, but we have a market that's closed in breakout inside of a larger trading range. How does price set up in our session? Our higher time frame, we have higher time frame selling above that level where our first red day locks in. We have higher time frame buying below this level where our first green day comes in. Now I want to clarify something very specifically. We're not counting pushes, we're not measuring bars, we're not looking for sweeps or hunts or anything else. We're looking for the setup. There's only two in a well-engineered template on the day: dump, coil, and pump. Point being, if you don't know what you're looking for, you'll just take trades. Whereas if you're hunting a 90-10 setup, you have a high probability trade setup opportunity. Now, our universal entry criteria from page 29 in the playbook, basic model for trade entries. This is designed to make things dummy proof. No thinking, zero stress, zero thinking, zero management, and zero emotion. And so traders, when you're trying to trade all the time, you're catching moves, you're getting in before the trade setup and everything else. Remember, simplicity. Rinse and repeat the same setup over and over again, not trying to take trades everywhere on 30-70 market conditions. Now, rinse and repeat literally means that. Entry, and when we have an entry, I don't worry about every little candle. I have my 3 levels. There's only 3 levels, and every single trader in the market has these 3 levels available to them. We have our entry level, getting in, taking a position, placing our stop loss, having a break-even level. Once the market closes beyond this level, going to break even if that's part of their trading setup, and either a range expansion projection for profit targets or a previous higher time frame level for taking profits. Entry, stop loss, break even level, and take profit level. Simple, repeatable, and scalable. A market that gave a signal, it set up with a dump, the coil, and then entry for the pump, and then our break even and take profit levels. Now, several traders have talked about, well, London seems to get all the trades. What instruments would I follow in Asia? And I just explained that. You're going to have 1 or 2 fantastic opportunities, whether they're front side or back side. If you're trying to take trades every single day in the session that you're trading, the question you want to ask yourself is, do I have an edge on those days in those market conditions? Or am I hunting trade setup opportunities day 1, day 2, day 3? There are 2 types, trend trades or reversal trades. And there are 2 types of setups on the day in a well-engineered template: dump and pump, pump and dump. Entry, stop loss, break even level, and take profits. So there's an example of a market that was in a trading range. Day 1, day 2 gave a signal day and set up into a well-engineered 90-10 template in the Asian session. Now today we had several traders in the London session trade a first green day opportunity on the Euro-Swiss cross-rate currency. We already had a market that gave a first green day signal right in the first week of the month and closed in breakout last week, and then pulling back and coiling sideways, giving another first green day signal on Monday, day 1, the opening range in a new week. So for London session traders, or traders in general who have brought this up on their watch list, again, a signal day on the front side of a new week. How does price behave in the session that you're trading? We have a market that's given us a first green day. We're heading into our Europe-London window, and we have a market that is now coiling sideways in a dump and pump template. So when we're looking at a dump and pump template, that can come from the high of day level, dumping down, coiling sideways into our timing window, whether that's Asia, London, or New York. We just looked at an example in the Asian window of a market that closed in breakout. And now we're looking at a market that's already broken out and then closed as a first green day, pulling back and coiling sideways into our Europe-London open. We have a first green day signal. Day 2 on the front side typically expands the range. We have our market that has been making higher highs. Basic model for trade entry criteria, page 29 in the playbook. in a trend continuation trade on a first green day signal. The same process applies. We have our entry, our stop loss, a break-even level, and either range expansions as potential take profit levels or a hold till close. Now, in this particular case, a retest of our extreme is an area to be locking in profits, possibly as we have CPI tomorrow. But again, the simple model: signal, then setup, entry, stop loss, break-even level, and take profits. Next, we're looking at the Dow Jones 30. It closed in breakout on Monday. We already have a higher time frame broken down market coming off a first red day signal at the end of January that coiled into our February midpoint range and continued to break down. We now have a broken down market. A first red day continuation in the beginning of March, and then a market again that's in breakout, continuing to trade lower highs, lower lows, closing in breakout on Monday, day one, the opening range in week 2 in a new month, and we may potentially continue to be breaking down. First green day signal, dumping down, coiling sideways on top of Friday's closing price, heading into our Europe-London window, coiling into our basic model for trade entry criteria. We have our risk managed, a break-even level, and a take profit level on a range expansion or hold till close. Now, again, just revisiting signal, first green day, we have a market that's broken out on the higher time frame, pulled back on top of monthly highs, coiling sideways with a first green day signal on Monday, front side of a new week, and the front side week 2 in a new month on the Euro Swiss. An excellent trade taken today in the Europe-London session. Now we have 10 a.m. major red news heading into our U.S. window. We have a market that's continuing to break down, closing in breakout. What type of template sets up on the day? Now we have a beautiful pump and coil heading into our U.S. timing window. We have 10 a.m. major red news, which into our U.S. session. Now the index is open at 9:30, and I've explained this before. If there's an opportunity for a rinse and repeat, whether that's a trend trade or reversal trade in a well-engineered template, the same process applies. We can be out before major red news, locking in whatever profits may be there, and then walking away and letting the news play out. There's 2 hours, which is plenty of time for traders to take a position, manage their risk. Basic model for trade entry criteria, page 29 in the playbook again. We have our coil as the U.S. session starts to trade. 8:30 a.m., we have an opportunity to start to get into the market. Paul Tudor Jones, think of your entry price as last night's close, and the same process applies. Entry, stop loss, a break-even level, and taking profits before the 10 a.m. major red news release. Anything can happen once that news is released. We could have saw it spike up into our short position, but an easy nail and bail opportunity heading into our U.S. window. And again, just a simple pump, coil, and dump in a market that closed in breakout that continues to trend lower. So coming back to pointing one thing out, markets only do 3 things, and a lot of people talk about that, but does your setup, your 90-10 trading setup, align with that? Breakout, pullback, trend continuation trades, breakout, failure, and reversal trading setups, as we saw on gold in Asia, or they stay range bound in a trading range, which also applies to gold in the Asian session. Now we saw 2 trend trades, the Euro Swiss and the Dow Jones 30, 3 different sessions, 3 different opportunities for traders in each one of those sessions. And I will say one thing in closing: keep it simple. Everything else is analysis paralysis, gobbledygook. You can make it as complicated as you want. You can put in all kinds of other terms and criteria and try to optimize. Simple rinse and repeat 90-10 trading setups. It has nothing to do with pushes, gaps, sweeps, premiums, arrays, blocks, whatever other things, soups you want to call them. Gobbledygook. Rinse and repeat. Pump and dump, dump and pump. Keep it simple. Rinse and repeat, and scale it up in size. And in the meantime, in between, don't do anything else that can destroy the good results that you're getting. The trader is the biggest variable in any trading business. Trade with edge, scale it up in size, rinse and repeat, and keep it simple. Have a great day, traders, and may the markets go with you.